Tesla hasn't looked back since launching its first Roadster in 2008. Many of the company's critics have been proven wrong over the years. Tesla is credited with accelerating the transition of the automobile industry from internal combustion engines to electric vehicles. The company is already posing a threat to legacy automakers' decade-long dominance. Let's take a look at where Tesla might be in 10 years. Last year, Tesla sold 499,550 electric vehicles. Over a multi-year horizon, it expects a 50% average annual growth in deliveries. It currently operates 2 factories in Fremont, California and Shanghai, China. It's also building 2 more factories, one in Berlin and the other in Texas. Tesla increased its deliveries by 65% on average between 2016 and 2020. Annual deliveries of the electric vehicle manufacturer increased from 76,230 in 2016 to 499,535 in 2020. Tesla could sell nearly 10 million cars by 2030 if annual deliveries increase by 50% on average over the next 4 years and then fall to 25% on average after that. To put things into perspective, Toyota sold 9.5 million vehicles in 2020, the most of any automaker worldwide. Tesla's expected growth numbers appear reasonable if we base this projection solely on its trailing 4-year growth rate. To begin with, previous growth was on a lower base. It may be difficult to increase production at such a rapid pace. Tesla currently has a production capacity of around 100 million cars. It would almost certainly double this capacity with its planned factories in Berlin and Texas. With an average capacity of 500,000 units, Tesla may still need around 16 more plants to reach its 10 million unit goal. Even if Tesla builds larger factories in the future, it may not be possible to expand capacity beyond a certain point. Hyundai Motor's Ulsan plant in South Korea, one of the world's largest, has an annual capacity of around 1.5 million units, whereas Volkswagen's Wolfsburg plant has an annual capacity of over 800,000 units. The availability of batteries could be a major stumbling block for Tesla's production expansion. To meet its high demand, the company plans to manufacture its own batteries in addition to purchasing them from suppliers. Tesla's growth targets are attainable, albeit difficult. Tesla has successfully navigated production challenges in the past and is likely to do so again. Tesla could still be among the top 5 automakers in the world by 2030, even if more delays and lower numbers are assumed. Aside from production issues, Tesla must find enough buyers for its cars all over the world. It is currently the market leader in electric vehicles. According to the International Energy Agency, global electric vehicle sales could reach 145 million by 2030. Up from around 11 million in 2020. If current policies are followed, Tesla is well positioned to benefit from this anticipated expansion. Legacy automakers, on the other hand, are releasing electric versions of their top models. In the coming years, this could significantly increase Tesla's competition. Its main assets are its brand image and product features. Right now, its top EV models have the longest range available. Tesla is concentrating on increasing production, eliminating bottlenecks, and increasing battery range. The company is also working on all fronts at the same time and expects to grow quickly. In short, despite competition and challenges, Tesla has the potential to become one of the largest automakers in the coming decade. Taking a break from the narration, I just want to say for a long time, I've been a Tesla supporter, and it's hard to believe, but I bought the stock for the first time, I think 8 years ago when it was like around a split adjusted $30, and I'm still like way with Tesla. I have a gain of roughly like 2,500%, and I believe there's like way more upside to this stock. Back to the narration. Tesla continues to be the market leader in the ultra-profitable EV market. The company, without a doubt, has the best products backed by cutting-edge technology. Tesla also has a distinct set of competitive advantages that it employs to stay one step ahead of the competition year after year. Tesla just put up stellar delivery and production numbers, and the company is on track to beat analysts' expectations this quarter with enormous revenue and EPS growth potential as we move forward. While Tesla's shares are unlikely to gain another 2,500% anytime soon, the stock is likely to hit $1,000 by year's end or early next year. Furthermore, Tesla stock could soar significantly higher in the coming years. Tesla had a fantastic year in 2020 and into the end of last year. The stock then experienced a significant 40% drop, around $550. The shares bounced back after a massive pullback, successfully retesting the $550 level. Since then, the stock has been steadily rising in a narrow, consistent channel. The current upward trend should be maintained until the bullish trend is broken. The bullish trend is strong, and Tesla shares could reach $1,000 by the end of the year. In addition to this, the company currently has a number of favorable fundamental factors to go along with the positive technical setup. Tesla maintains a multifaceted competitive advantage over its competitors in terms of marketing, sales, software development, battery production, supercharging, design, development, and production. Tesla creates and delivers everything from the ground up, and the company is committed to staying ahead of the EV curve in terms of innovation. Most traditional automakers, on the other hand, are still primarily focused on internal combustion engine vehicles and are still pivoting to EVs. The bottom line is that the electric vehicle market is steadily gaining ground on the controversial internal combustion engine market, and Tesla is the undisputed EV leader. Tesla just announced another record quarter of deliveries, with 241,300 vehicles delivered in Q3, a 20% increase over the previous quarter and a staggering 73% increase year over year. Tesla delivered a total of 9,275 Model S/X cars, as well as 232,025 Model 3 and Model Y cars to the general public. Adjusting for lease vehicles, we get around 7,420 Model S and X vehicle sales and around 218,104 Model 3 and Y vehicle sales in the third quarter. Tesla sold 187,163 vehicles for $9.874 billion in the second quarter of 2021, excluding leases. According to this sales image, the average selling price, or ASP, for all vehicles was around $53K. In the second quarter, Tesla sold approximately 1,550 Model S and X vehicles. As a result, if we assume an ASP of $100,000 to $110,000 for the Model S and X vehicle sales, the Model 3 and Y segment will cost around $52,000. As a result, we can use an ASP of $105,000 for the 7,420 Model S and X vehicles sold in the quarter, and $52,000 ASP for the 218,104 Model 3 and Y cars delivered in the quarter, to get an approximate number for Tesla vehicle sales in Q3. Tesla's consistent and robust EPS growth trend should continue, and I believe the stock should reach $250,000 or higher by the end of the decade. Some market participants may now argue that these stock price forecasts are overly optimistic. However, I believe these projections are conservative. First, Tesla's EPS could be higher than I expect in the future years, and the company's P/E ratio could stay higher for longer. In my opinion, the only company that can compare to Tesla is Amazon due to its unique growth dynamics. Amazon's current valuation is roughly equivalent to what a more mature Tesla valuation might be. Amazon, by the way, is currently trading at around 58 times EPS, which is exactly where I've set my Tesla price to earnings ratio for 2029. Furthermore, the projected stock price appreciation is only 220% from current levels, which is modest when compared to the number of years. Of course, when it comes to Tesla, there are dangers to consider. While I believe the company can earn close to $50 per share by 2030, it's currently well below that figure. As a result, there's a chance Tesla won't achieve that kind of earnings growth, I expect. Demand slowdowns, increased competition, supply issues, slower growth, and other risks should all be considered before betting on Tesla to nearly tenfold its EPS by 2030. Serious concerns should cause Tesla's valuation to plummet, and the company's stock price could even reverse if serious problems arise. As a result, I believe that prior to investing in Tesla, one should carefully consider the risks. So what do you think about our estimation? Comment down below.